Good afternoon, I'm Jo Sheldon and welcome to Capital Gains, a show all about the pounds in your pocket. Over the next 3 months, we'll be looking at ways to make you money and help you look after it once you've got it. We'll be focusing on key financial services, investments, mortgages, PEPs and ISAs and asking where are the best deals. Today we're looking at shares and I'll be talking to stockbroker Paul Kavanagh, who'll talk us through the stock market jungle. Each programme we'll hear from entrepreneurs who started out high risk but are now high rollers whose business brains are making them millions doing the things they love. And Times tipster Mickey Clark is part of the team, bringing the inside track on the markets and tipping the sectors to make you money. Well, we've all at some time had that one big idea we're sure will make us a million. Often the road to riches can be a long, hard struggle. Other times the opportunity to make a fortune may be staring you straight in the face. Today we profile the man who's inspired generations of globetrotters. His travel guides have become the backpacker's Bible, spawned a multi-million-pound global empire and, for Tony Wheeler, given him his dream job. For millions of travellers worldwide, the sights they see are not so much discovered by chance, but meticulously mapped out months before. And more than likely, these globetrotters may still be clutching their backpacker's Bible, The Lonely Planet, a creation which inspired a revolution in travel guides and started with Tony Wheeler on a bench in Regent's Park in 1970.
I came over to the park in the afternoon with a car magazine and sat down on a park bench, much like this one, to read the magazine, and Maureen, my wife, who I had not met at that point, wandered over and sat down at the other end of the park bench, and a year to the day later we got married, and a year after that we went travelling, and that led to the very first book.
Newlyweds Tony and Maureen set off for the Hippie Trail, a minivan adventure through Asia to Australia. 3 months later, and with 27 cents between them, they sat down at the kitchen table to scribble a travel guide. 25 years later, it's a worldwide publishing empire with more than 300 titles selling 3 million copies a year.
The name came out of a bottle of wine, I think, actually. We were looking for something to call it, people could write the checks for it, when we did our very first book. And we'd just seen the film Mad Dogs and Englishmen, a Joe Cocker, Leon Russell, rock bands on the road sort of movie. And there was a song in it called Space Captain, and Cocker sings, actually what he sings is, once while travelling across the sky, this lovely planet. I got the words wrong. It should have been lovely, not lonely. Well, one of the things these days we spend a lot of energy on is our internet site, that we're an information provider for people like Yahoo and Virgin Net and Travelocity. So we spend a lot of energy on that, and I really have no idea where these things are going to go. I think one of the things we've accepted is, once upon a time we would have said, well, we publish travel guidebooks, which is of course what we still do, but it isn't the real emphasis anymore. The real emphasis these days is we provide travel information, and the fact that at the moment it goes into travel guidebooks doesn't mean it's always going to be that way. Maybe in 10 years or 20 years' time, people are going to carry their computers and download from satellites when they want the information. I just don't know.
With more than 1 million hits a day, it came as no surprise when a billionaire computer king came calling.
I did meet Bill Gates, and yeah, his people in his business did sort of make... I mean, it would have been small change. I mean, Bill could have reached into his pocket, and brought out whatever he had in his left pocket that day, and it would have paid for us. And I think what it brought home to us was that what we really have hold of is this amazing amount of information. And I think, that towards the end of the century, what's becoming more and more important is information. And if you're an information provider, you've got something worth having.
Well, I'm glad to say Tony's managed to fend off Bill Gates for the time being anyway. If Lonely Planet were a public company, it would no doubt appeal to the growing army of small private investors. In the last year, 29% of the population received windfall payouts and share ownership increased by more than 3 million. 12 million people, almost a third of the adult population, now own shares.
To most of us, stocks and shares are part of a complex, bamboozling world that only city slickers and the very rich understand. But things have moved on.
Then you better start swimming or you'll sink like a stone. Oh, the times they are a-changing.
The city is coming to the people. Now, when you're getting the groceries, you can nip in for a portfolio of shares from your friendly high street stockbroker.
The aim is for clients to feel comfortable with just walking in off the street, maybe without even having an appointment, just coming past thinking, I've been meaning to go in and talk to someone about investment, and we are there and available and willing to talk to them.
Here the clouds of numeric confusion can be cleared. You can find out how to buy shares and you can choose to have them managed as well. But how much will it cost?
There is a myth out there that you need to have a lot of money to warrant a stockbroker, which is not true at all. Clients can potentially start a portfolio with as little as £3,000 or £4,000.
Well, that's all very well if you've got £3,000 or £4,000 to spare. But what if you've only got, say, 30 or 40 quid a month to spare? The truth is, the stock market doors are open for you too. Take Paul French. He's a signal supervisor on the Underground. 3 years ago, together with family and friends, he set up a group to buy shares. Now he's so hooked, any bit of spare time, he'll be checking the markets to see how the portfolio's doing.
6 of us got together. They were work colleagues and family, and basically we saved about £10 a week. Eventually it became £40 a month. We got to our £1,000 and we made our first purchase.
So you aim for £1,000 and then you get a block purchase of shares?
That's right, yeah. And our fund has now grown to about £30,000. We're aiming to form an investment company within about 5 years because we like to be quite a major player on the market.
So from Underground signal supervisor to city slicker?
We hope so. Everset Mining, I don't know if you remember us talking about this one, there were a lot of press about them realising that there's no tungsten in the world.
There are 20 in the group now. Paul's brother and dad and a couple of old friends form the hardcore, but on other nights you'll see a WPC, a taxi driver, teachers and housewives. Their money has grown by 20% each year, way over savings rates.
It was a bit of fun first of all, but it's getting more serious now. Once you see the totals on the sheets at the end of the month, it's like, hang on, there's a bit of money there now.
What he's after doing is purely trying to beat the building society.
Each of us started from £1 and today we're at £30,000 after 3 years, which is quite an achievement.
And they hope to make $250,000 by 2001. Pretty good, isn't it? Not surprising then that investment groups are becoming increasingly popular. The non-profit making company ProShare helps establish them.
If you go back just a year ago, there were really only about 300 clubs in this country, and I have to say that's not many more than there were in Iceland, not one of the great share-owning democracies of the world. But now it's really taken off, and the rate of growth is such that we've got over 2,600 clubs, and we're increasing that number by something like 150, 200 clubs a month at the moment.
But if you don't want to set up a group, you can do what thousands are doing every month and log on at home to a special internet service to buy and sell your stocks and shares.
We have discovered since we launched this service, people who have come to the market because of this, rather than were already in the market and then have gone to the web. People have actually seen this as the way forward for them, and it has actually knocked down some of the barriers that they perceived being between them and the market.
For the times they are a-changing.
Well, Paul Kavanagh is a partner at stockbrokers Killick & Co. and writes for the Sunday Times. Joins us now. Paul, 20% return, that's pretty good, isn't it? Paul French has done very well.
That's a fabulous return. It's probably beaten many of the professional investors. What Paul has set out to achieve there is to beat building society rates. He's accepted a higher level of risk by going into the stock market, but certainly that 20% is well above building society rates.
Why do you think there is this seeming boom in share ownership?
Well, it all started back in 1984 when British Telecom was the first privatisation issue, and that attracted the private individual into share ownership. Since then, we've had a whole rush of building societies and further privatisation companies, from the electricity companies to the water companies, and that's really been the main focus for increasing the shareholder ownership in this country.
And do you think people are becoming more aware that perhaps their pensions aren't going to be worth so much as they thought they were going to be, and that they've got to actually look out for themselves?
Well, that's the key difference I've spotted over the last 10 years, that the UK shareholder now is more savings orientated, recognising that they will have to save for their future pensions and savings plans, and the stock market is a valuable marketplace for achieving those objectives.
Paul French did very well, but does the stock market really in general, provide a better investment than, say, a bank or a building society could ever offer?
Over the longer term, it certainly has. But I want to sort of make the point that what Paul has done has allocated a lot of time to research, analysing a lot of information. So that 20% sounds desirable, but I bet Paul has put a lot of work into achieving those sort of returns. So it's not quite so simple, but I do think that over the longer term, if you look for long-term investment, the returns that have been achieved will be well in excess of those that are achievable in cash and building societies.
But of course, you know, shares do go down. We've seen crashes in the past, and, you know, you can lose everything.
Indeed, back in 1987 we had the crash, and that's really the big barrier to most people thinking about putting money into the stock market. But if you actually look at a chart of the FTSE 100 index over the course of, say, the last 20 years, that crash is really just a small blip now. So if you're going into the stock market, treat it as long-term. You can ride out any rises and falls, and I think over the longer term you will continue to achieve higher returns.
So you've got to just be brave.
That's right.
OK. Paul Kavanagh, thanks very much indeed. Well, if you're considering taking the plunge into the world of shares, there are a few pointers which may help you decipher some of that market jargon. The price-to-earnings ratio shows how much profit a company earns per share. A high PE indicates a riskier investment with no steady income, but the potential for substantial rewards in capital growth. A low PE indicates a safer investment with steady returns. The dividend yield is simply the return that shares pay you each year. The market capitalisation is the company's price tag as valued by the stock market. And the projected earnings are the analysts' forecasts for the future. This is what the market looks at rather than what's happening today. In the next programme, we'll be looking at mortgages and exploring the best way to go about buying that dream home. Well, time for a quick break, but still to come, the challenge of the small business. All you need to know about starting up on your own. Plus, Mickey Clark will be telling us what's hot and what's not in the world of shares. Welcome back. Well, being your own boss is a dream many try, but few get to realise. Last year, over 500,000 new businesses started up, but nearly as many also ceased trading. In fact, less than half of all new businesses managed to see the year out. For those who do make it through the tough times, the rewards can be great, and there are always thousands willing to take the plunge. Gilly Parton went in search of the key to small business survival.
Karen Tierney knows what it takes to go it alone. A year and a half ago, she started her own business, making upmarket cushions. She works from home. Her overheads are small, but her ambitions are big.
My mum used to have stalls in Covent Garden, and I used to hang around with her, and I thought, this is the way to be. I want to have my own business, and I couldn't imagine working for someone else.
With a degree in interior design under her belt, she was keen to start immediately. A crash course in business followed, and then she headed straight for the bank and her first knockback.
I wanted to borrow some money, and I thought, I worked out I needed about $5.5 grand to start up. And they said, no way.
Rule number 1, to make it on your own, you need bags of self-confidence.
I was so sure of myself. I thought, well, they don't know, and I know, and I'm going to convince someone.
Any lender will want proof that you know what you're doing. Karen completed a business plan, more about that later, and finally got that loan from a local enterprise scheme.
What have made me realise is that it's not all about designing and making and creating. It's a hell of a lot of admin and marketing and PR and thinking, how can I get some more work? And because it's your own, you really want to work out how much money you're making, and I've really got into it, luckily.
It's early days. It'll be a year before the loan is paid off and the company in profit. But I was inspired. Mark, nice to meet you. I've come here full of enthusiasm. I want to set up a company of my own. Most high street banks have a small business advisor. The help is free, so take advantage of it. My big idea is for a TV production company. Our meeting lasted half an hour.
If you work on your own, you could be a sole trader or you could be a limited company. You've got to do a level of market research. Will you work from home? Will you rent an office? What makes you different from the competition?
It wasn't long before that business plan came out. Clearly, I've got some serious sums to do. So what about money then?
We won't give you 100% of what it costs you to actually set up in business. That's not the way the bank works. You'll need to put some in, we'll put in the rest.
Well, this is the fun bit. What I have to do now is think up a name for my new company and possibly a logo. Now, I don't have a computer. Obviously, that's something I'm going to have to invest in. But I do have a pen and a piece of paper and a couple of ideas. So here goes. Get a solicitor to check with Companies House that the name isn't already taken. Britain is a nation of small shopkeepers. The desire to be our own boss is in the blood. And even though it's risky, we still keep doing it. 500,000 new small businesses are set up every year in the UK, even though 400,000 fold within 3. We have the highest number of small businesses in Europe, 5 million out of a total of 20. They employ 10 million people and generate £300 million a year. If it's encouragement you need, try talking to some of your local entrepreneurs. Madeline Danvers runs a makeup store in Ladbroke Grove.
Well, it's very satisfying to have grown as much as we've grown and supply most of the films, I suppose. And most people in the industry know Screen Press.
And pump them for the pitfalls too.
Don't go to the bank and get large amounts of money or let people loan you large amounts of money. Use your own money and reinvest it fast and furiously.
Wise words from someone who started as a stall holder in Portobello 40 years ago.
At least I've tried it, and if it doesn't work, which I'm sure it will work, but if it doesn't, at least I can say I did it.
Well, we're joined now by Stephen Alambritis from the Federation of Small Businesses. Karen seems to be doing well. We don't know yet about Gilly's big idea, but, you know, so many businesses do go under, as we heard, you know, many before they make it to the year end. I mean, what is, in your view, the chief reason? Where do people mainly go wrong?
It's when they've overstretched themselves. They've borrowed too much money from the bank. They've been over-ambitious. They've bought a property instead of leasing. They've shopping and working from a high street instead of from home, really overstretching themselves, going too far, jumping in with both feet.
Sort of too enthusiastic almost.
Oh yes, in many respects, and not thinking it through properly.
Mm. But I mean, if you had one piece, I mean, people sort of know about making a business plan, you know, they've heard, you know, they've got to get, go and see the bank, get the right money and things, but one invaluable piece of information to advice to somebody setting up a small business, what would that be?
That would be that an order is not an order until it's been paid for. What I'm really saying there is they must get their credit management right. They must make sure they get paid on time, that cheque arrives in the post. We have a lot of small businesses failing simply because they're not paid on time for goods they've delivered and for services they've provided. So really it's to get their credit management right, to make sure the companies they're dealing with will pay them on time.
Now, this week in the papers, there's been talk of tax breaks in the budget for people setting up small high-tech companies. Would you like to see the government doing more of that?
I think that would help, but not like the old days where the Thatcher years were about negligently encouraging people with tax breaks to start up. We hope that Gordon Brown this time around will actually couple that with good mentoring, with advice and know-how for small business. It's not just the money, it's who's helping you, who's supporting you.
Just very briefly, Karen, a woman, is there still sexism when it comes to people setting up businesses?
There's a little bit of that still there, but we hope it's the old-fashioned way. That's gone out the way. The majority of businesses being started up now are women, and they're doing very well.
OK, Stephen Allen Brutus, thanks very much indeed. Well, a quick recap on the basic building blocks for starting out on your own. Get as much down on paper as possible. Try and get the bank on board. Keep overheads low, rent rather than buy, as Stephen's just told us. Get your support services in place. Find a good accountant. Remember what's unique about your business. Keep in touch with the market and keep tabs on the competition. When it comes to taking control of your finances, computers are now proving to be a valuable tool. With a link to the internet, you can use your PC to manage your bank account, buy and sell shares, or even book a cheap flight. And there's also specific financial software to help you stay on top of your money. Microsoft's latest finance package is designed to help you manage your money, the internet providing a direct link straight to your bank account. There's also a wealth of advice on hundreds of money matters, from paying school fees to student banking. And if you can't be bothered to pop down to the shops for a daily paper but want to stay in touch with the financial world, these two are just a click away. We're still lagging behind the Americans when it comes to surfing the net for business tips. CNBC's business website offers near real-time tracking of the American stock markets. And Bloomberg's website gives you instant access to major financial stories across the globe. You can even set up your own share portfolio, and the computer will track your favourite stocks for better or for worse. In the coming weeks, we'll take you bargain hunting on the web, searching for the cheapest deals in everything from homes to holidays. And don't forget that the links to all the pages shown here, as well as details of all the other items in the programme, can be found on our website, and that's www.lnn-tv.co.uk/capital-gains. And do feel free to email us with any questions or queries that you have. Well, the internet may be fine for casually browsing for those share tips, but you can't beat the real thing. And we're lucky to have Times tipster Mickey Clark on our team. And throughout the series, Mickey will be guiding us through which sectors are in and which we should bin. And of course, for each programme, we'll have the benefit of his top tip. I have every confidence, Mickey. So, I mean, as far as you're concerned, what sector do you think's performed best, say, over this year?
I think you look at the top 100 companies, and certainly the banks and the pharmaceuticals have done well. Perhaps they saw the best at the start of the year and they've trailed off a bit since then, but the banks were looking for all sorts of deals to be done, mergers, takeovers. You know, everyone was licking their lips expecting a good time. It didn't really happen, and I think we've seen the share prices come off their best by quite a way, but there's still good value there, and it's the same with the drug companies. They've all been doing very well, and they've outperformed the rest of the market.
And poor old manufacturing's in the doldrums because of strong sterling.
Right. Yeah, the strong pound. No matter what the Chancellor says, they are suffering because it is very difficult to compete abroad when you've got a strong currency backing you.
Now, the market's beginning to look a bit precarious after a sort of very good bull run at the moment. Do you see that continuing?
For the time being, yeah. I mean, the cracks first started to appear in the Far East back in October. Hong Kong, Japan effectively going bust. Others started to follow, and it's something that you can't avoid. You can't isolate yourself from it. So it started to affect other economies, and certainly the American economy is looking a wee bit rocky at the moment. Bit of inflation creeping in, suggestions that productivity is dropping, that people are paying themselves too much, and the echo can be heard down Threadneedle Street with the Bank of England saying exactly the same and pushing up interest rates.
The Charity Shield kicked off the football season. Football stocks have been so popular. What do you make of them?
Well, on the field of play, they're athletes. In the stock market, they're donkeys. They've never done any good. I'm surprised people ever touch them. If you support a club and you've got a bit of money to throw away, yeah, go and buy a share certificate and stick it on the wall. But don't look to it as a real investment. There's one or two that might make money, but they're few and far between.
So what is your, where do you go for a real investment? I mean, what's your tip this week?
Well, I'm going to be a bit of a wimp this week. It's Glaxo Wellcome, which came out with some figures just recently. Profits were down. They've lost sales because of patents expiring in two best-selling drugs, Zovirax and Zantac. That's ulcers and herpes, would you believe? But they've got a strong portfolio of drugs coming through. And a few months ago, they did try and merge with SmithKline Beecham. City's not convinced that merger's dead yet, but if they don't do it with SmithKline, they'll probably do it with somebody else. So a good one, good heavyweight.
OK, Mickey, thanks very much indeed. And that's it for this week, but I'll leave you with a look at the main headlines from the world of finance.